Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Forex look at the dollar versus Canada. Today's date is April 30th, 2024. Let's get started. At 8:30 a.m., we got the U.S. Employment Cost Index. That was much higher than expected at 1.2%, which is well above what the Fed wants to see. And with the Fed meeting on Wednesday, or today and tomorrow, with their interest rate decision due, that has the dollar moving higher. So that's one influence. We also saw Canada GDP come in a touch lighter than expectations, and that too is helping to increase the U.S. dollar and weaken the Canadian dollar. Now, we did just get consumer confidence, which came in a little bit weaker than expected, and so we are seeing a rotation back to the downside. But let's talk about the technicals that are driving this currency pair. Now, after that dump of data, both in the U.S. and Canada, what we could say, looking at the hourly chart, is that the price prior to the data was ping-ponging, or at least between these two moving averages above, which is the 200-hour moving average and the 100-bar moving average on the 4-hour chart. And on the downside, the 100-hour moving average also held support right before the release of the data, and that data sent the price breaking to the upside, and in the process got above both the 100 and 200-bar moving averages right here, and opened the door for further upside momentum. Then we reached this swing area right through here, which had a number of different swing lows and swing highs going back in time. You can see how it was a floor through here, and then fell below the floor, became a ceiling through here before moving to the downside. A ceiling here, and in trading here today, the price ultimately broke through that level and came back down, retested the low of the swing area before moving to the upside. We now have moved above the 50% retracement of this move to the downside here, which is another target to get to and through, with the 61.8% retracement as the next target. So with all that technical mumbo jumbo, I guess, although I consider it a little bit more than that, what can we say going forward? Well, I would say that this area right here is now support. If the dollar is going higher, we have the potential for a more hawkish Fed tomorrow. Then holding the 38.2% retracement of this last move to the downside would be one of the the indicators that we'd want to see from a trading perspective. In addition to that, it's near the low of this swing area here, so there's a double reason why that level should hold support. More aggressive buyers might look to buy against the high of this swing area and hope for a rotation back to the upside after this little dip after the consumer confidence data. So that's how I see the dollar versus Canada, with the buyers taking more control above the 100 and 200 bar moving averages here, holding the 100-hour moving average here. All that points to a more bullish bias for this currency pair. We'll see if the 38.2% retracement of the last move to the downside can hold support going forward. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.